The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time to break down the options market. It's time for the Option Block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from OptionPit.com, Mike Tusaw from KnowYourOptionsInc.com, and John Griegas from Options Express.
Welcome back to the Option Block, and we have another interesting panel and another interesting set of topics to discuss. We are joined today by the usual suspects, starting off, as always, with Mr. T himself, Mike Tusaw. How are you doing today, Mike?
I'm doing well. Yourself?
Not too bad. Did you ever see that movie, Dr. T and the Woman? Is that one of your favorite movies?
I have never heard of it, actually.
Really? So. I guess not. You should put it on your recommended viewing list.
All right, I'll have to check it out.
Richard Gere actually plays Dr. T, and all the women love him, so there you go.
Oh, wow. Let's tell my wife about that one, then.
It's a page right out of your own life. I'm surprised you haven't seen it. So I ask you maybe if they had based it on you.
Well, my wife's a nurse, so I guess if that makes me a doctor, then, well, no, we don't need to go there.
There you go. Yeah, well, good thing your wife doesn't listen to this show. She might take objection to that.
Right.
All right. We'll go around the table the other way this time. Mr. Greasy Meatball, or maybe more appropriate today, McRib, Mark Sebastian. How you doing today?
Yeah, Sebastian here. Just another fun, slow day of trading, and just kind of kicking back. How are you guys doing? You see we've got T-Nav here. That's my nickname for him.
T-Nav, I like that. Yeah.
Yes.
Our listeners may be able to tell by his deep, booming baritone that we are also joined in the rotating Options Express seat today by Tim Navabi. Tim, how you doing?
I'm doing pretty good, Mark. Thank you very much. How are you?
I'm doing good. Yeah, it was a little bit of a waxing and waning day, I guess you could say, in the market. We'll just dive right into the trading block, and we'll get right into the meat of it. How about that?
Sure.
All right.
The trading block.
And welcome to the trading block. This is the segment of the show where we discuss some of the interesting developments and trends we're seeing in the broad marketplace today. And it was another one of these slightly choppy, I guess you can say. It wasn't too dramatic today. We were up a little bit, then we were down. We finished the day up about 4.5 handles in the S&P, 13 points, so pretty much unched on the Dow, and the VIX down 0.2 points, not dollars, but points. So I owe nothing to the VIX jar. And yeah, there wasn't too much really driving this today. It seemed like a lot of the banter starting off early was coming off the impact of the extension of the tax cuts. I know there's been a lot of back and forth on this issue and what it will do. Looks like all that work, all that effort that Obama and his team put into getting the tax cuts extended doesn't seem to really have done much for the market. Looks like the market seems to have shrugged that off. I'm sure you guys have a tax component to your advisory. What do you think about these tax cut initiatives they just put through?
Well, it's going to be interesting to see with what goes on with dividends, and that's still kind of uncertain for the future. I'm not necessarily talking short term, just more long term, because when you have, like, for example, there's some clients with which we've worked with that we actually still have one right now, and that he is long a bunch of dividend-paying stocks. It's a 7-figure account, and he's long a bunch of dividend-paying stocks, and that's how he gets his income. But we have it hedged with S&P futures, and so there's a lot more to it than that. But we're getting more and more clients doing things like that. So in terms of the dividend tax, that's one with which we do have concerns over the long haul with that, just because of the fact that we're not the only ones that are doing this, so to speak. We have our own unique hedging strategies along those lines, but not just us, but a lot of financial advisors with baby boomer aged clients that are counting on dividends for a source of income in retirement. That's going to be a pretty big concern, I think.
I'd imagine your clientele would be disproportionately impacted by that.
Yeah, and it's not something that, we're definitely not fans of raising the taxes on dividends. And, I'm of the school of thought that why do we even have a dividend tax in the first place? How is that? I still don't understand how we as Americans allow that to happen. How is that not double taxation?
It is, but I think such a small minority of people rely on dividends for income that it has slipped through. I know when Bush initially passed that dividend tax cut, it was very controversial because it was seen as favoring a very small percentage of the population. I think part of the problem was that it was reasoned as stimulus, and I think it's kind of hard to argue dividend tax as stimulus. Not many people who are living on the economic threshold of poverty are relying on dividends. There was talk when that was passed that the reason that made it through was that Bush asked his economic advisory team what he should do for stimulus, and Charles Schwab was on that panel, and he made a lot of money in dividends from his stock, so he suggested a dividend tax cut, and it made it all the way through. That's at least the urban legend I've heard bandied about. I'm not sure if you've heard that as well.
I haven't heard it, but I would believe it. So.
Yeah, exactly. And what do you guys think about this? Is it a good move? Is it a bad move to extend these tax cuts a little bit further?
Oh, it's interesting. I think that some of them make a lot of sense, some of them don't. My opinion is that income taxes don't help the economy as much as capital gains and corporate taxes help the economy. So from my perspective, I think it would have been logical to, I really like the way the setup was for the deficit panel, the way they had kind of set up those real tax rates. I think it made a lot more sense. And then I really like the concept of, capital gains and investment taxes. The more you tax investment, the more you kill it. Income taxes are different. They're very different. So, for small business owners, I love when they talk about small business owners. Most small business owners are not on the standard income tax. They're on like the K1 schedule, which is totally different than what they bring up with, the
standard income tax discussion.
And so it's kind of a moot point. And that would be my kind of take is like, I think you do better lowering dividend tax, yes. Lowering capital gains taxes, yes. Lowering investment taxes, yes. And then obviously corporate taxes for sure.
It's always been my opinion if they really want to incentivize small business in this country and people taking risk on new business ventures is they should go after the self-employment tax. I mean, that really is an amazing impediment to people going out, to people who leave jobs and start up a new venture for the first time. They're amazed that all of a sudden they're getting hit for this other half of their Social Security tax, and it's a huge, huge obstacle for a lot of people.
Well, the self-employment tax exists solely for tax accountants and lawyers to make more money off of you.
I'm real surprised about how President Obama sort of did a 180, and he didn't seem to really ask anyone from his party, what their ideas were or kind of where were they on the stance. I thought that he was all about lowering the budget deficit, and immediately here we come and add to it. So I'm kind of scratching my head on this one. I am in agreeing with Mark, Sebastian. There is some good to it, and there's some not so good to it. But overall, I think it's just a surprise and shock, and it sort of shows that they're going to do what they want to do. They may say one thing and do the other. So.
Whoa, 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 whoa. How dare you say politicians say one thing and do another? That's the most ridiculous thing I've ever heard.
That wasn't the change that I voted for. Let me just say that.
We
got
a diehard loyalist here.
Apparently. Here's the issue, is the last time Obama actually consulted his party, they buried him. Okay?
Right.
You look at that healthcare debacle, and all those parties did, all his own party did was bury him. They killed him. Okay? If they had actually come and put together something sensible that made sense, that wasn't ridiculous, completely nonsensical, and they managed to sell out to the insurance companies and make everybody think they want nationalization and screw over the doctors, and it was unbelievable the way they put that thing together. And I think he learned his lesson, a big leadership lesson there, is instead of letting Congress dictate to you, your part, letting his party leaders dictate to him, he's dictating to his party. Bill Clinton did the same thing, and he ended up being a very popular and successful president that did a lot of good things.
I was just going to say, look at Clinton. He's the exact same model. I mean, he got crushed in the midterms even worse than Obama did, and he moved straight to the center, just like Obama's doing now, and it worked pretty well for him. So it's not surprising to see a president who gets his clock cleaned in the midterm suddenly take a different tack towards the other party. But I know, Tim, you guys are active over at Options Express in the commodity land. So what's your commodity rundown today? I know you're looking at nat gas and a few other things.
Yeah, the two commodities that I wanted to talk about real quick here were copper and natural gas, both at the opposite ends of the spectrum here. Natural gas is starting to look like it's coming to a rally here, and it was a very, very strong day today. We had a very bullish outside day. I know that there's a lot of natural gas out there. That I do know, but
there's particularly a lot in your cubicle at Options Express.
Yeah, tons. No, not that. But
that's that chili you ate today.
Mm-hmm. It did reach a 2.5-month high today. And, some of the fundamentals as far as, what the EIA is expected to report on Thursday, would be that stocks are falling. I don't know about you, but I'm really sick of this cold weather. And it's very, very cold very early. So
yeah, I say it's just getting started, so buckle down. You got a few more months of it out here.
Yeah. So, that could be some of the reason why we're seeing such bullish action in natural gas. And as far as copper is concerned, the copper market here, still pretty bullish here. The next upside target here would be around the 427 area. Anything that, could sort of temper this bullishness that we have, would be a close, around 387, anywhere below there. That would sort of confirm that a top's been in. Other support down below would be around the 361 area. It seems to be shooting for that 427 area. And, those are my two commodities.
And it's like the strong dollar is weighing pretty heavily on your commodities today, Mr. T. Give us a little quick rundown in your commodity rundown there.
Well, I think with silver hitting the highs that it hit, if you look at SLV the other day, I think it just touched 30 and just backed off of it. So I think that, there's got to be a pullback at some time. And when you have big moves as such in silver, there's going to be pullbacks. And as we had mentioned the other day, for a lot of our clients, we had sold the 25 puts on SLV, and it's, quite frankly, it's one of the ones where I'm kind of, for lack of a better term, hoping I bought the top, so to speak, because I'd love to have silver come back down so we can start to get back in it, so to speak. With gold, I think that it's pulling back, but we have the puts in place to where should gold continue to go down a little bit further, one thing that we're considering that I've been looking at actually for a while today, and the numbers don't quite match up yet to make sense to do it, but buying back the short covered call and then putting in a 1-by-2 ratio spread as kind of a repair strategy. So this is an area to where I think that there's a lot of opportunity if you have the long-term bullish bias. Now, if you don't have the long-term bullish bias, then I don't know what to tell you. It's just kind of a different thing. But for the long-term bulls who hedge, this is an area to where I think we're going to have a lot of opportunities to do a few things in both gold and silver coming soon.
That 1-by-2 might bite you, though, if gold takes off to the races again.
Well, that's where we have to continue to adjust to the upside, and it's the same predicament that we're in when we have a short covered call on it, and a similar predicament, and it goes through the short covered call, and we have to adjust or either get out of it or do whatever we need to do. So, I mean, there's a good and a bad side to everything, so that's just kind of how we're viewing it right now. But as of right now, we still don't have any it doesn't match up for our situation to really make any moves at this point.
You're still waiting to pull the trigger.
Yeah, we would need to see a little bit more of a pullback to pull the trigger on it for the gold 1-by-2.
And closing out the old trading block, I just wanted to throw this in there too because I know it's near and dear to your heart, Sebastian. That is, McDonald's had their earnings and they surprised a little bit to the downside. I guess people aren't flocking to the McRib the way a lot of people expected. So my question then is, what does this mean is this a good sign? People aren't forced to the dollar menu anymore, or is this pretty dire when even McDonald's can't make money in this environment?
Well, I think the issue, you got to remember how far McDonald's has gone, okay? McDonald's is killing it. And, they shouldn't call it I'm loving it. They should say I'm killing it. Because that company's just doing so well. You know what? They had a couple of stumbles. The McSmoothie has been a train wreck. Shocker, people don't want fresh fruit from McDonald's.
The coffee, though, has been cleaning up for them.
The coffee's done great. But, some of their little other things they've gotten into have not gone so well. I think they've got problems with, it only takes one little product missing out for it to, drop the company a little bit. So, my personal opinion is that, yeah, you know what? They they probably belong about $4 or $5 cheaper. So
you're saying the McFrap or whatever they called it, it outdid the McRib, huh?
Yeah, no, and people love McRib, but I guess there's a shortage of it right now. And, maybe there is. Maybe we are seeing a little bit of cycling out of McDonald's and into other foods, and people are becoming a little more health conscious, possibly. Who knows? Probably not.
Probably not.
So, probably not.
Well, I mean, McDonald's is a stock that, if you look at it throughout all the tough times with which we've had on it, or the tough economic times, people can always scrape together a couple bucks to go buy a Big Mac or the dollar menu or whatever the case may be. For those of you Chicago listeners, I'm more partial to Portillo's when if I'm looking to eat fast food. I think that's my personal favorite. And if you've never been to the Chicago area, if you ever come to the Chicago area and you like fast food, Portillo's is second to none in my opinion. But I've never had anything bad from that place. It's amazing. But with McDonald's, I mean, it's just where it's still a very strong company, and I think that it's been on a gradual uptrend over the course of the last. I shouldn't say gradual. It's been on a pretty steep uptrend over the course of the last year or so. I mean, the fact that it's down 2% on the day-to-day, it's not really, it's not good for it, but it's not a bad thing. Not too bad of a thing, I should say.
Oh, wow. I'm all about the McRib.
I have to admit,
there's nothing I like more than meat shaped like a bone.
I have to blame you. I was near McDonald's the other day, and I had your going on about the McRib in my head, so I had to go in and actually. I haven't had McRib in forever, and it was like going back to childhood again. It was.
You were in heaven right now.
I was like, Sebastian isn't that far off on this one. I can go for the occasional McRib.
Yep.
One thing that I really enjoy there is I like to have chicken for breakfast, and that chicken biscuit sandwich on the breakfast menu I think is very, very good.
Oh, well, do you know what you're going to like here, Mr. Navabi?
Yes.
is they are bringing to the Chicago area.
Yes.
What's it called?
Chick-fil-A.
Chick-fil-A's coming to Chicago.
Yep.
Well, that's that Southern chain, right?
Yeah,
Yep.
and they're home of the chicken biscuit.
Yes.
You are going to be in heaven. You're going to be like, you're going to put on 19 pounds.
Have you ever had Chick-fil-A?
I have.
Any of you? You have?
I have.
I've had it once, yeah.
I've never had it. No, I've heard about it. Never had it.
For fast food, it's pretty delicious.
It's and I think it's kind of healthy, isn't it? Or they try to put a slant on health.
You know,
there,
if
right?
you're not eating the fried chicken, yes. But
correct, yeah, right.
you know, people think that the grill, like the fried chicken sandwich, is healthier than the burger. It's way worse. Way worse. You know, there's a book called Eat This, Not That. And the first thing he says is, eat the Big Mac, not the fried chicken sandwich.
Uh-oh, Tim, there goes your breakfast. I didn't even know they even had chicken for breakfast at McDonald's. That's how out of it I am there.
That was a Chick-fil-A response, and
Yep.
and it's not the same execution. So,
Hey, in my opinion, McDonald's wants to boost their sales. They should just make breakfast 24/7. That would be fantastic. I would go there for a sausage McMuffin. I wouldn't go there for a Big Mac on a regular basis. But a McMuffin and some hash browns, I could go for that.
the McMuffin is delicious. I'll give you that.
All right, and closing out the old trading block then with all that juicy chatter about McDonald's, and we'll roll right into the odd block.
The Odd Block.
And welcome to the Odd Block. This is the segment of the show where we discuss some of the interesting and or unusual activity that's coming across the tape today, or yesterday in this case, because we're recording actually a day early. We're going to start it off with Motorola. They closed out $8.24, up 14 cents. And this is an interesting name for a number of reasons, not just because of the activity that went on yesterday. And we've been playing in and out of them for a while now. We were looking at putting on maybe some risk reversals out in the Jan strikes, and lo and behold, yesterday, right where we were looking, the Jan 7.5 puts went up 17,000 times yesterday all of a sudden, with people sold anywhere from 14 to 16 cents. A lot of those are listed as price variations, so it's always hard to tell exactly what the customer was up to on those things. I hate when they list them that way, because then you don't know what they're really trying to say with that, or if they're just saying they don't have enough data to say what it actually was. But a lot of those 17,000, this is the name that does an average daily volume of about 24,000, actually probably less than that, about 20,000 contracts. So that's a sizable amount for Motorola. It's doubly surprising given how much is going on in January. And it seems like a lot of the options activity in Motorola these days is really focused on Jan. And the bulk of the at-the-money strikes in January have about 3 times the open interest of the corresponding December strikes. People are piling in Jan. I'm not sure how much you follow Motorola there, Mark, but there's a lot coming up in January. First off, they're spinning off their mobile division, so the Droid, all that kind of stuff. At the same time, once they do that, on the 4th, that's going to trade under a new ticker symbol, I think it's MMI. Then their traditional Motorola stock is doing a 7-for-1 reverse split, and so that's going to take off on there up to 7 times.
Oh, wow. Well, what price is the traditional Motorola stock going to be when they spin off the MMI?
Yeah, that's the question. When we were looking at pricing up these risk reversals, we were thinking that the split was going to happen later in January, not on the 4th. So obviously that's going to play in any spreads you're doing out in January coming forward. And I don't know. I'm not sure if that's been determined yet. They're probably going to wait till the split date to announce that. I would determine. Of course, we also have earnings at the end of the month, and also CES, a big consumer electronics show where they set the tone for the year. And Motorola will certainly have a lot of developments there, as well as the long rumored and probably finalized Verizon iPhone coming out in January, which will definitely eat into Motorola's Verizon marketing the Droid instead of market the iPhone. So that's going to hurt Motorola as well. So a lot going on out in this name and a lot of activity. Bulls coming in, hitting the stock on the Jan 7.5 strike. The open interest out there is well over 100,000 on that strike right now. So a lot of action right around that area. A lot. I'm not sure if you guys watch this name at all, if you have any plans to, but it's an interesting one to watch, interesting one to parse some positions on and how you want to position going forward.
Yeah, no, that's, what I would encourage people to do is take a real strong look at what they're trying to do, understand the deal, and then maybe trade the options. Biggest losers I ever took, and I know a lot of other people took, is when I didn't quite understand the deal. And if you understand the deal well, you can make a lot of money, or you can really get worked.
Yeah, if you just take a flyer when something like this, when it's reverse splitting 7-for-1, you probably want to know a little bit more of the granularity before you dive right in. But yeah,
Agreed.
This is one that's I'm going to have on the horizon for the near future because it's definitely one to watch, and they're going to be moving quite a bit, and a lot of developments over the next, I think, month or so out in Motorola. So if you're looking for an active name with some decent liquidity and maybe a place to put on a few bets, this is a good one.
I was just gonna add something to what Mark said. I mean, I think he said it perfect. I think he left out one thing, which was determine your risk.
I couldn't agree more.
I think that should be part of every trade.
Every trade. I agree with you 100% there, Tim. Tim, you and I should go out and have beers because we agree on everything.
All right, and then moving on to, we like the little biotechs here. Here's another one for you. Orexigen, O-R-E-X. They closed at $9.45. They essentially doubled today, up about 100%, up $4.70. This is the name that does an average daily volume of about 6,000 contracts. They did 110,000 today. And no surprise, this one got the blessing from the FDA, so the stock went off to the races. If you look at a chart of Orex for the last year, it's been pretty range bound. It's been like $4 to $6 pretty much. And today, after the FDA gave them their blessing, the thing just went off to the races. It's up to about nearly $10. We saw OX at over 100,000 contracts going up, over 60% of them calls. So the bulls out in force in Orex. The DS11s were the most active, but this is one of these ones, you pick any strike, December or January, you're going to have a couple thousand of options going up today. In a name where they barely do a couple thousand options a day, that's a lot of activity.
This sucker, Mark, this sucker could take a run here.
Oh, yeah.
I think I could see it going past, I could easily see it going past $11. Now they got something to prove. How quickly do they get bought out is the other thing.
I don't know the specifics of their. I said they have a diet pill, so they got approved on a diet pill. So I guess the question is, do they get gobbled up by a Glaxo or something like that, or what's the next step for them?
Nobody knows.
But it's an interesting one. Not surprisingly, after the announcement, the vol plummeted about 60%. It's still over 100, but I mean that's not surprising in a name like this. It's just an interesting one to watch for the next few sessions, the next few months.
Oh, no, I was just going to say, something I read about this morning that I just kind of had to chuckle and then, move on was the first sentence, I think, said the FDA determined that the benefits outweigh the risks and side effects. I'm not too sure.
That's a glowing recommendation, yeah.
Right. I mean, I think that's like those potato chips that have that, certain oil where, it'll make you sick or something like that. But the benefits of the taste of the chip is a great one, if you don't mind the side effects. So I just thought that was pretty interesting.
The pill may kill you, but you'll lose 100 pounds and your hair will be thick and lustrous before you die. So it's worth the side effects.
One of the things that got a bad rap a few years back was Olestra.
Yes.
And here was the deal is, people started worrying about kind of the leakage issue. Mm-hmm. And it turned out, it's made by Procter & Gamble. Procter & Gamble did a study. And based on eating the same number of chips, okay, the leakage problems were higher with people eating regular chips than they were with people eating the Olestra chips.
Who's the poor soul who had to conduct that awful study?
I don't know. But
Go ahead.
The issue was that people see fat-free, low cholesterol, and what do? The fatties eat the whole bag. And so they would overeat and get all of this oil and grease. It's the same thing that happens if you eat a ton of grease, okay? If you eat just a ton of gravy, a ton of whatever, you know what? You're going to have some stomach problems the next day, okay? It's just kind of the truth.
I don't know if I would put too much stock in a Procter & Gamble funded study of their own chips. But I don't know if you ever eaten any of those Olestra chips.
They're pretty good.
They're good for a little bit, and then the side effects kind of kick in, and you're.
Oh Mark.
I'm not a huge fan of Alestra. Let's just leave it that way.
Like I said, if you eat the whole bag, you're going to have problems, but that's the case with regular potato chips. You ever eaten like that extra piece of pizza, then you feel kind of greasy afterwards, and then you feel kind of gross, and then it's like you drank 9 cups of coffee all at once?
So that's it for Orex. Just keep an eye on that one. Probably some potentially more upside to go in this name. If you want to take a flyer on some upside calls, hey, who knows? Take a flyer unless you have some really good insight into the diet pill market. And then moving on to the complete polar opposite of this little biotech name into Citigroup, which is continuously the most active equity option name out there. They do an average of over 500,000 contracts a day. Today they did well over 800,000. They closed at about 461. Yeah, 464, up a couple cents today. So what's interesting about Citigroup, the government just finally dumped the last remaining portion of stock that we had in Citigroup. They dumped 2.5 billion shares for $435. Leave it to the government to get a price well below the market. But they still ended up making $12 billion in profit on the deal. So it turned out to be not that bad of an investment for us, the taxpayer. They put in $45 billion, got about $57 billion out, so not a bad deal. Yesterday, or on Tuesday's session, actually, the Citigroup did about 1.4 million contracts, so about 3 times their average daily volume. Calls outnumbering puts 5-1, so the bulls were out in force. If you looked at the net premium and the net deltas, they were all leaning positive, so people were tending to buy calls. So yeah, a lot of bulls out there in Citi, and this is one of those ones where the underlying is so cheap as well. There's a lot of ways you can play it. I see a lot of people coming to our site. I tended to like, back a few months ago, the stock substitution deal on this. I mean, even though the stock is cheap, you can still go out and get like the Jan 12s, like 2 halves for like a couple bucks, and those are pretty popular for a while there as well. I'm not sure you guys have anything on in Citi, or what do you guys think going forward? You like to sell vol in Citi? You want to just gobble up the stock?
A while back, Goldman put on a massive time spread. It was the Feb March, or the Jan March 4.5 spread, 4.5 call spread, when Citi was trading around 430 or so. I want to say they did 250,000 of them, and then Goldman came in and bought back a bunch of its Jan calls. So my thought process is that long term,
off to the races.
Bullish, I'm bullish.
Yeah.
So,
yeah, they tend to know where the bodies are buried in these deals.
Yeah, no kidding. So I like it. I think obviously they were thinking it's going to kind of hang around through through January around 4.5, but long term they seem to love it. So I think that's where it could certainly be going is north.
Yeah, we got. Oh, go ahead, Tim.
Oh, I was just going to say it's a very popular stock with our customers, and I see a lot of them doing what you said earlier, Mark. Just taking a shot at some of the Jan 12s options out there. I see a lot of that.
Yeah, we see that a lot as well, and we got into those probably a few months ago, back when the stock was around 380 or so. We did some stock substitution deals. I like it long term. I mean, I like the stock as well. It's a fun name because it's just there's so many ways to play it. Hence the fact that it does 500,000 contracts a day. Everyone and their mother has a different take on Citi. That's why we like to bring it up. So if you're worried about being a government taxpayer owner of Citi, you don't have to worry no longer. You are out of Citigroup. Moving on to our final name is Masco Corp, MAS. This is a little one. They do construction supply stuff. They make cabinets and that sort of thing. They closed at $13.14, up 76 cents. And this is another weird one. They do about an average of about 1,000 contracts a day. They did over 50,000 today. We saw a lot of activity in the April 14s, getting picked up anywhere from 50 to 60 cents. We also saw a lot of these trades going up on the quote-unquote adjusted terms and that kind of stuff as well. So whenever we see those kind of prints going up, we're always a little bit dubious about some of the data underlying it. But still, there's a lot of activity going on in Masco. We also saw about 25,000 of these April 12 puts going up for $1. They were purchased and that's one of those adjusted terms trades. So take the prices and the values for what you will. The D's 13s, about 11,000 went up today. A big chunk of those in a call spread. The D's 13-14 call spread was sold about 4,000 times for in the neighborhood of 27 cents. So a lot of players coming into Masco, and it looks like the news in Mass. I couldn't see anything that was particularly driving a lot of this. They do have some dividends, but this is not a dividend play, nor would you be playing in the D's 13s on a dividend play unless you were truly insane. Sector. No. So I don't know what's driving this volume, but so this is the definition of unusual activity. If you guys have know more about what's going on out there, feel free to jump in.
No idea. I don't know anything about the company. They
announced a professional nail gun was released just a couple days ago. So that's got to be 50,000 contract worth of volume right there.
Well, I'll tell you. That's Mel. You know what? If we saw a big uptick in commercial and residential construction, this company would do really well. Mm-hmm. Maybe it's that kind of play. It's a play where, well, what upticks first? Suppliers or the home builders? It's the old USG play, right?
Yeah, I mean, Home Depot was rallying a bit too, and this could get pulled along with that. Granted, this is a pretty sizable wave, going from 1,000 contracts to 53,000. That's
a big play.
And the thing is, it's not all like one big spread. It's not one strike where like it was a week ago in Dollar General, where some newsletter was lighting up the tape. Maybe a couple of newsletters picked a couple of different trades out here, but like I said, we saw that size call spread getting sold. We saw buyers of the April 12 puts, 10,000 buyers of the April 14 calls. So the activity was all across the board. Very, very interesting name to keep an eye on, this maker of construction supplies. All right, and with that, we're going to close out the odd block, and we'll move straight into the express/spread block.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Express/Spread block. This is the segment of the show where our rotating Options Express fellows regale us with what's going on and what the customers are up to over at Options Express. And today we got Tim on the hot seat. So Tim, what is going on over at Options Express today?
Well, there's something interesting going on with this company called Rhino, R-I-N-O. Have either of you heard of it?
No, I never have.
Okay.
Yes. It's also a great nightclub in Chicago.
I was just gonna make a joke about that. I've heard of other Rhinos, but not this one.
We had a girl. There was a girl in my high school we called the Rhino. For many reasons.
I'm guessing she's not working there though.
No, she's not. She works the door.
There we go.
This company here essentially is accused, of violating some securities laws. Their stock was halted for trading in about mid-November, and today is the first day that it opened back up, and it opened back up on the pink sheets. And it's very difficult. It's very difficult to get a quote on this. Anywhere you go on the web and you try to get a quote, you won't find it. So, what I'm want to talk about here is just, again, the benefit of, working with a broker. You know, somebody will call us up. They'll say, I own some of these Rhino options, some of these Rhino puts. Can you help me out? What am I supposed to do? We can call down to the floor. We can get live bid asks. We can make it, fluid and transparent for the customer to, sort of take care of their position now that the stock is trading again. For example, we had a customer who owned some $5 puts, and he was ready to exercise. And we just kind of told him, let's just, no real reason to do that right now. He did own a bunch of stock, so, this was his sort of protection. But we thought, why don't you just wait? Don't exercise these puts right now. Maybe the stock starts trading a little bit higher than 5, and you can unload your shares then. So, again, I just kind of wanted to talk about, when certain things happen that are very difficult to understand, or very difficult to get a price on, or just, certain ways to handle a position, it's good to work with a broker like Options Express, where, we're very familiar with the options on this, and the strategies that, you can use, in addition to, being very quick on the phones, to get quotes and things like that.
A good tip for all of our listeners.
Great tip.
Anything else going on in Options Express land today, Tim?
No. Just like you guys had said early in the day, it was a very slow day. And it was very difficult to watch.
I keep telling people, we could talk about this in Around the Block, but remind me to talk about the fact that that cash is a position. So
Okay, we'll do that. All right, and with that, we will close out the Express/spread block and move right into the strategy block.
The strategy block.
And welcome to the strategy block. This is the segment of the show where we discuss some interesting or particularly compelling or relevant strategy or options tactic. And lately we've had a number of people jumping into the old strategy block, so it's nice to have Uncle Mike returning with his smoking jacket and his pipe and his cup of cognac or his brandy snifter. And he's going to sit back and he's going to regale us with some options wisdom. Uncle Mike, what is on the docket for today?
Well, with all the tax talk that's going on right now, I wanted to talk about something that new traders may or may not know about, but it's something that I think you ought to be aware of, and that is the tax benefits of the 1256 contract. Now, the 1256 contract is an option or futures contract that enables you to get potentially a more favored tax treatment depending on your style of trading. And with that, let's say, for example, that I were to buy a call option on Google, and then a week later I sold the call option on Google for a $100 profit, or Cisco, or Apple, or Decker's Outdoors, or Wells Fargo, or whatever. That is going to be taxed at the short-term rate. So with that in mind, it's something that most people are aware of, and most people are happy to pay it because they're ahead money, so to speak. Now, let's say that I did that same strategy on the SPX, or RUT, or any 1256 contract, if it has this labeling. if I were to make $100 on my call option that I sold at a profit on the SPX, I would not be taxed at 100% the short-term rate. 60% of my profit would be taxed at the long-term capital gain rate, and 40% would be taxed at the short-term rate. It gets what's called 60-40 tax treatment. So for short-term trading, if you're going to take a profit, it's obviously better to take a profit on a 1256 contract, or most of the time. There's always exceptions, but for the most part, you're typically going to be better off from a tax standpoint going around that method. So with that in mind, what is a 1256 contract? Typically, they are index options. And if you want to know which index qualifies for 1256 treatment, go to the exchange's website, ise.com, cboe.com, and determine, and that'll help you to determine whether or not it gets the 1256 tax treatment. Futures also qualify for 1256 tax treatment. So with that in mind, it's something with which I think you should definitely consider. Now, if you're trading within an IRA, makes no difference whatsoever. So if the question is, should I trade SPY or SPX, from a tax standpoint, inside an IRA makes no difference. However, when you're trying to make that decision and it's outside of an IRA, it's something with which it shouldn't be the end-all, be-all and the only thing with which you trade, but it should factor into your decision. The CBOE and the ISE are always looking to create products that get the 1256 tax treatment on it. So with that, if you're looking for that and you're trading an index or a futures contract of some sort, or a futures option contract, it's definitely worth investigating whether or not that contract gets that specific tax treatment. And that is all I have for today.
And that's one to grow on. I'm not sure if the SPY stuff does. Do you know if SPY falls into that?
That's a gray area. I've heard some people say it does, some people say it does not. I personally am claiming it as ordinary income for everything that's outside of my IRA that I trade it with. So with that, I'd be very careful on that one. The other thing that you can consider taking a look at, what the CBOE created is a product called XSP. It moves almost identical to SPY, but it's an index option, European style, and it gets the 1256 treatment.
Oh, there you go. I haven't even heard of that one. So that's a good recommendation. Then, if you're concerned about the tax treatment and you're worried about SPY, if Uncle Mike isn't taking it as 60-40, then listeners, you shouldn't as well. But yeah, check out that product from the CBOE. That's actually an interesting one. Then
the XSP, it's not quite as liquid as SPY, but it is something that I have worked with client money on. So I mean, it depends on the strategy. Sometimes the bid-ask spreads make sense. Sometimes they don't. Everyone's situation is different, but it is something to take a look at and to add to the potential toolbox, so to speak.
Yeah, that's true. If you're getting crushed on the bid-ask spread, then the tax treatment isn't going to help you. But if it's liquid enough, then definitely it's worth a look.
Yeah, at times it is there, and so every situation's different.
All right, and with that, we will close out the strategy block and move right into Around the Block.
Around the block.
And welcome to Around the Block. This is the segment of the show where we discuss what's on our radar for the next couple of sessions. And, we talked a lot about employment over the past few sessions, and the jobless initial claims are coming out tomorrow, so that'll obviously be a big mover on the market. What else are you guys watching out there right now?
I've been watching this volatility get smoked. And I'm watching a lot of people want to trade in conditions where maybe trading isn't that good, okay? Vols are kind of lows. All the things that I look for, at least from a selling perspective, look pretty bad right here. And yet you'll see people out there selling right now just because they feel the need to trade. Tim, stop me if this is something that you've never heard before, but for some reason, people have this, urge to be, in the market trading. It's weird. I see a lot of people that are deathly afraid of trading, and a lot of people that want to trade all the time and overtrade. I don't see a lot of people that are like, hey, cash is a position, but you know what? So is good trading. And so I have that is kind of the thing I've been seeing right now. And so around the block, what I see is, tepid. I see a tepid market, and I see them looking to price out Christmas as quickly as they can. Watch for that next week.
Yeah. We kind of, like I said, we mentioned a little bit about Motorola before. That's one of the ones that we're keeping an eye on. That's a little bit longer term into January. What's going to happen with that one? Obviously, a lot of movement expected, I think, out there. Also, I kind of agree with Tusaw that I think Cisco is an interesting one. Maybe not at these levels. Maybe let it firm up a little bit first. People have been hitting the puts out there for a while there, so the vol level's not what I would want if I wanted to go out there as a premium writer. But an interesting one to watch nonetheless. I think those are a couple that we have on our radar in addition to the macro and the jobless initial claims numbers coming up tomorrow. Got to worry about Mr. Bernanke pulling the trigger on QE3 now, if these numbers aren't good. What about you, Tim? What are you hearing from the people calling in to Options Express?
Not too much. Some of the names that we had mentioned before, like McDonald's, like Citigroup, those are always popular stocks to trade. But I wanted to agree with Mark Sebastian, who did say that there's overtrading going on sometimes, or how much overtrading can hurt you. And I remember reading a book a couple of years ago, about option volatility and pricing. And on the very last page, it was talking about the strategies, and it said if you can't sell vol because it's overvalued, and you can't buy it because it's undervalued. It literally said, go on vacation.
Yeah. So,
I think that's kind of, today was a good example of that.
Yeah. Yeah, don't force it if you don't have to. All right, I think that's good advice to close out this episode of the Option Block. I want to thank both of you guys, along with Mr. Tusaw, for coming on the show. And Mark, what do you guys have going on at Option Pit these days? I know you said you had the thing for SFO. What else you been up to?
Webinar for SFO. We just launched a kind of intermediate course to get traders to the point where they feel ready to possibly join a mentoring course. So it's kind of what I like to say, there's nobody out there really bridging the gap between all these guys that give you too much information and a lot of these guys that don't give you enough. And that's kind of what this is. This is the warm porridge that Goldilocks loves. And so if you go to optionpit.com and /events, you'll see it right there. It's called the Level 2 Prep Course, okay? And here's something I'm giving for Option Insider Radio. Future Professionals Level 2 course. This is something I'm going to give for Option Insiders only. If you use the code OI2011, okay? It'll take $100 off the price.
Well, there you go. You heard it first, listeners. Use that code OI2011, and we'll put that up in the show notes as well, and so people will know, and maybe we'll even put it in the podcast tags so you could see it. So that if you're coming in and you want to check out this magical Goldilocks porridge that Mark Sebastian prepares for you over at
I'm known for it.
You are known. Before I even knew you, I had heard rumors of your porridge circulating back on the floor and saying, you hear this guy over in the Blockbuster pit, he's crazy and he loves McRibs, but he makes a damn good bowl of porridge. And and so I never had a chance to check it out. Maybe now I will check it out for myself. So yeah, the code OI2011. Check it out over at optionpit.com. And of course, Options Express, you guys, pretty easy to find. Find you over at optionsexpress.com. You guys have anything interesting or exciting going on at the website that our listeners should go check out?
We have a number of webinars. I think they're very beneficial. There's many of them, they're all sort of scattered out in time. go ahead, browse through them, find the one you like, go ahead, sign up for it. In addition, take a look at some of our educational events maybe are coming around, around your area. Yeah, that's about it.
And of course, if you want to learn more about the unusual activity we discussed today, or any of the options events, or any of the other information that we pulled from the options market today, you can find it all at theoptionsinsider.com. Just surf on over there and click around, and I think you'll like what you see. Thanks again to all of you for downloading and listening and streaming and subscribing to the show. And we'll see you next time on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.